Markets have bounced after President Trump paused some tariffs, but is the volatility over? European markets have surged this Thursday on the back of Wall Street's best day since October 2008, after President Trump put most new tariffs on hold for 90 days, and the EU has followed suit. The US will still, though, charge a 10% duty on imports from almost all countries, and the uncertainty has made investors very nervous. Anna MacDonald is an investment manager at Aubrey Capital Management. Anna, these tariffs are off the table now, but of course they could be back in 90 days. How do investors cope with this kind of uncertainty?
Well, we've seen them rushing into the markets today. I think that is probably something that you could expect after such big drawdowns that we're seeing. However, I think investors do remain uncertain. 90 days seems like a good reprieve, but we don't know what's going to happen in the interim. We don't know what kind of solutions and deals Trump is really looking for and whether they're actually even going to be possible. And as you say, you've got a 10% tariff in at the moment. Now, that's going to have a significant effect, particularly on the US and on the inflation that they're seeing. So I think investors are going to be looking pretty carefully at individual stocks, pretty carefully at valuations, and seeing what kind of companies they think are going to be able to wear out this to manage this period of volatility.
What will this remaining 10% then mean for UK and European companies?
Well, for the UK, we don't have too much of a goods imbalance, which is why we were rewarded with that 10%. So I think it's got to be remembered that it's going to be US companies paying that extra. So it's going to depend very much piece by piece. It's going to be obviously more inflationary in the US than it is here, and we may have the opportunity to divert some of our trade to other places. And I should imagine that's the same with the EU, who are also, remember, facing the tariffs on autos, as far as I'm still aware that is applying. So that's a big part of the German economy, for example.
Should we still expect these slightly lower tariffs than we thought we were having yesterday to push up inflation and slow growth globally, do you think?
I think we should remember for the US, the US consumers are going to be paying the costs of the goods that those costs are going to be passed through to them. Some might be borne by the middlemen, but mostly it will be the US consumers paying those costs. And China they're a very big importer by the US. I think in order it's Canada, EU, and China. So if there are goods that cannot be sourced from elsewhere, they are going to hit the US consumer, and that is going to add to inflation. What's interesting to think about when you're looking at the inflation picture is that a lot of the inflation that we've been seeing more recently in the US has not been goods related. For whatever we hear about eggs, it's actually mostly been on the services side. So the new inflation effects will be on goods, which they will have to pay. The good sign, though, for them, as it is globally, is the oil price has gone down, which means that goes into a lot of products. So globally, that will be a little bit deflationary.
As you mentioned, President Trump has escalated his trade war on China, putting that tariff up to 125%. Does that mean we should expect dumping of cheaper Chinese goods elsewhere?
Yes, I think that is a possibility. I think China has been aware that Trump wanted to do this kind of trade war for quite some time. So I'm assuming they've got plans in place of how they might deal with it. And they've been very happy to retaliate back. So we'll see how long this war of tariffs continues between them. Yes, it is definitely a risk that we start to see cheaper goods coming throughout Europe in particular. I think some Asian countries have got some levels of protection in place, but it will mostly therefore be coming to the EU.
That was Anna MacDonald of Aubrey Capital Management. Don't forget, you can watch more videos on Reuters.com.